Great. Hello, everyone. My name is Adeo Resi. I'm CEO of the Dessel Group. I'm going to do a little introduction to the LP Institute today, talk to you about what it is, what it offers. But really, what I want to do is get questions about being a limited partner in venture capital, about the LP Institute program, frankly, anything that you have. So what you'll notice at the bottom of your screen is a Q&A button. Don't be shy. If a question comes up now, if a question comes up during the presentation, pop it into that Q&A area, and we're going to do our best to answer every question that you have. In addition to that, you're going to notice a chat there at the bottom, and I see that Eliza just introduced herself. Hello, Eliza. That's a great place to introduce yourself, to put your LinkedIn profile, just to let other people know about yourself, about your interests, etc. And so if you want to discuss things, if you want to share your profile, the chat's a great place. We don't monitor the chat per se for questions. So if you put the questions in the Q&A, we will get to them, and you do the discussion, interaction, profile sharing in the chat. Okay, so I'll get started a little bit on the LP Institute, but before I do so, I'd love to just take a moment, introduce myself, and introduce the Dessel Group. So again, my name is Adeo Resi. I'm CEO of the Dessel Group. I've been around entrepreneurship and venture capital for the better part of over 30 years at this point. About half of that time, I was mainly starting companies, and I got very lucky to have started a couple separate billion-dollar companies and a few multi-hundred million-dollar companies in my career as an entrepreneur. And on the other side, on the investor side, I've done a lot of things. So I've been a venture capitalist. I've started 14 funds. I'm an LP now. We've invested in about 18 funds right now, and with more coming. We have a fund of funds. In addition to that, I've done things like create the Safe Note, which some of you probably have used. I actually gave it to Y Combinator, and they popularized it. So I've done a lot of things in the world of entrepreneurship and venture capital. And what Dessel Group is, the company that runs the LP Institute, is we're really trying to bring venture capital into the modern era. Because what happened, which is an interesting phenomenon, and I'm sure historians and academics will study this for a long time, is that with things like the Founder Institute, which I created and runs acceleration programs for entrepreneurs in about 300 cities worldwide, entrepreneurship exploded everywhere from Central Asia to the plains of Europe. Entrepreneurship literally is everywhere. Well, entrepreneurship was growing around the world, and $1 billion of companies are springing up everywhere. The venture capital market just did not follow suit. It was stuck in the 1990s, maybe 1980s even. Most of the work was done in spreadsheets to run these firms. Most of the coordination and systems were like email. So it was like email and spreadsheets. And it was venture capital is, and it's changing. So in some ways it was a cottage industry that did not grow and meet the needs of modern entrepreneurship, which was exploding all around the world, creating unicorns in Latin America, Asia, Africa, everywhere. And VC was like still largely centered in Silicon Valley and not really growing to meet the needs of entrepreneurs around the planet. So we saw this, and I set up Dessel Group in sort of mid 2021 to modernize venture capital. And the problem was, and it still is, though we're fixing it, really threefold. Number one, there weren't enough actual humans in venture capital to dispense the money needed, right? Number two, the people who were in venture capital were using antiquated tools like email and spreadsheets in a modern world of SaaS platforms and all this stuff. And then the third problem was a capital problem, that there wasn't enough money flowing to the right um, investors to get in the hands of the right entrepreneurs all around the world. So, and in many ways, that's the genesis of the LP Institute, which I'll talk to in a moment. So we call this three-body problem: training, tools, and capital. We need to train the next generation of venture investors. We need to give them the tools to succeed in the needed world of funding great startups everywhere. And then we have to help them get the capital so that they can deploy that capital and get the best returns possible. And so that was the genesis of the Dessel Group. And we have the leading training programs in the world for entrepreneurs, for venture capitalists, for people wanting to work in venture capital, and for limited partners. We have the best tools on the market today to run a venture capital firm and for limited partners to invest in venture capital firms. And we have a very effective capital markets group that has a success, probably one of the top, if not the top performing fund of funds in the world today, plus a marketplace where LPs can discover general partners. And so what I'll be talking to you about briefly now is what we call the LP Institute. It's a program to train limited partners to invest in new and emerging managers. So let me share my screen and I'll walk you through it. And don't be shy with questions. Please pop them in the chat, etc. So the LP Institute is a 8-week program. It can take a little more than 8 weeks because there's some break weeks in. So call it 10 weeks with breaks, but 8 weeks of actual stuff. It's an 8-week program that is designed to help someone interested in venture capital investing that maybe has done a little bit of venture capital investing really level up and become a world-class investor in the venture capital asset class. Okay. And we've really modernized the LP experience. You can discover general partners to back in a marketplace where you can read about them and learn about their interests and history. So this is probably should have existed a long time ago. I'm not really sure why it hasn't happened yet, but we did it. You're going to have opportunities to easily book those meetings using modern tools of like picking calendar times. And in fact, we've sort of flipped the script because in a lot of history, you were an LP, maybe you put a flag up somewhere and said, hey, I'm looking for investments, and GPs would come and pitch you, and some of them would be good and some of them would be bad. Some of them might be of interest to you, some of them might not be of interest to you. It was kind of very hodgepodge, disorganized, and messy. And we flipped it around where now you can see a whole bunch of general partners that are doing interesting things, and you can pick the ones that you want to meet, right? And that's everybody loves this much better. LPs love it more because they can choose who they want to meet with, and GPs love it more because the LPs that come to them and those LPs want to meet them. So we've actually done something which kind of seemed backwards, but once you did it, it's like, oh, this is the way it should work, right? Because if you're making an investment, you want to meet with people that are of interest to you. And of course, those people would rather be met with because they know you're interested. And so once we sort of flipped the script and this started working, everyone's like, oh, this is such a better way. And you're going to get to participate in that by being part of the LP Institute. So we've actually fixed investing on a pretty profound level. And here's an example of what it looks like. So you have a dashboard. In that dashboard, you can search and browse and filter. You have profiles of the GPs. You can read about them. You can see tags about the things they're interested in working on. And then if you want, it's very easy. You see that button that says book a meeting. You just click the book a meeting, you book a meeting. Very easy, right? So, you know, why didn't this exist before? I don't know. But, there we go. We did it and it's working really great. And it's part of what we're going to be doing in the program. So beyond just introducing you and allowing you to find amazing general partners to meet with and potentially invest in, the program will help you meet other limited partners that are interested in investing in venture capital. You're going to learn how to pick good managers for you to invest in. And this is I want to just stress, for you to invest in, because I might want to invest in a one type of general partner and someone else might want to invest in a different type of general partner. It's very investing in venture capital, especially in what are called emerging managers, which are the newer managers in the asset class. It's not a very quantitative decision. It's a very qualitative decision. So you're going to say, hey, I care about these things. I care about, let's say, climate or healthcare or AI or whatever. And I also have these values. And you're going to be managers that care about those same things and have those same values. And that's the perfect match for you. And one GP and LP may be a match, and that same GP may not be a match with another LP. So it's very personalized what is right for you and what is right for the GP. And you're going to learn how to find out how to match correctly with the right type of GPs that will not only make you money, but also align with your vision and values. And we'll help you do that, help you go through a quantitative process. And I'm going to give you a little hint. The easiest way to do this is meet a decent amount of GPs. And you don't need to spend hours and hours and hours meeting them. You can spend a half hour here, a half hour there. And over the course of the 8 weeks of the program, you might meet 5 or 10, or possibly more. We've had people meet up to 20 GPs, and that will help you learn how to find and segment the GPs and identify the ones that you want to invest in. And then at the end of the day, the biggest goal of them all is not only to make the investment and meet your peers, but actually to get great returns. And I can tell you right now that we're very careful to feature general partners that either we have invested in or we are working to invest in, planning to invest in, et cetera. So these are GPs that are, I would say, in the top decile, possibly even top ventile of all general partners worldwide. So the marketplace is filled with some of the best of the best, and that should allow you to make great returns. And that's the LP Institute in a nutshell. I'll give you a little bit more details and then we'll hop into your questions. But you're going to learn how to master venture capital investing, particularly in what we are calling emerging managers. Just so everyone knows, an emerging manager is someone working on Fund 1, Fund 2, or Fund 3. And it turns out in venture capital that those emerging managers get the absolute best returns. They're often twice as good or more as an established manager working on fund 4, 5, 6, etc. So there's a lot of reasons why these emerging managers perform better. They have smaller fund sizes, which is correlated to better returns. They're hungrier, which again is correlated to better returns because they're working harder. They have untapped networks, and the list goes on. But it's well documented by all research agencies and everyone in the industry and LPs that have been around for a long time that emerging managers get the best returns. But they're kind of difficult to invest in because it's a quantitative decision. It's not a quantitative decision, it's a qualitative decision to make that investment. And we're going to show you how to do that and help you get everything you need to know to be successful doing it. It will take a few hours a week to go through the program. Call it 6 or less. If you're doing 6 hours a week, you're meeting with lots of GPs, you're reading a lot of stuff, etc. If you go down from that, maybe you read a little bit less, you do some more meetings, but it should be 6 or less hours a week to master the craft of this investing. And the way the program works, it has a big socializing component with your peers where you discuss all the things that you're doing and learning. There'll be mentoring sessions every week. So there's a socializing session, there's a mentoring session every week. That will take a couple hours right there. Then there's materials. We recommend you read them. That might be an hour or so of reading. And then you're going to be doing investments, and that's the remaining time. So if you miss some socializing and you go to the mentoring materials, so 6 hours if you do all four of the boxes, and less than 6 hours if you like do less socializing, etc. And of course, you could do a little bit more than 6 hours if you want to read more or whatever. You can always read more. If you want to do more meetings, you can do more meetings, but you should be able to get everything you need with 6 hours or less. So there's a bunch of questions that we'll cover in the program that will be great for you to know. How does venture capital really work? It's a bit of a black box for a lot of people, and if you're going to be investing in the asset class, we're going to give you an overview of how it actually works, how GPs do their job, and this is great for you to understand, especially if you're going to be making an investment into the asset class. What type of returns can you expect? Generally speaking, I can just give you a little tip right now on this. The emerging managers will, if you get, even a mediocre one, you're looking at like a 2x. If you get a good one, you're looking at a 3 to 5x. And if you look at a great one, I think the greatest fund of all time got 280 something x. So I mean that's that would be a great outlier. But there are funds that get, kind of crazy level of return. So I think from an expectation standpoint, going into emerging managers, looking for anything from 3 to 6x would be a desirable outcome. And that would be over the course of 10 years. And we'll cover that a lot more detail in the program, but I'm just giving you a little teaser. We'll help you figure out how to source great managers that can get, 3 to 6x or better. We'll cover how to diligence these managers to make sure that they are who they say they are, and of course, your diligence level varies with your check size. So if you have a larger check size, right, you're probably going to do more diligence. But if you have a smaller check size, let's say 100,000 or less, you're going to do less diligence. And as part of all this, we're going to show you, I mentioned check sizes. You don't actually write a single check. You make a commitment of, let's say, 100,000, and it gets called as the manager needs it over time. And we'll cover all that in the program, but we'll give you the best practices to do the due diligence, to pick the right managers for you. And then we'll go through you get these things called the limited partner agreement, or LPA, and they can be intimidating. Let's just put it this way. Lawyers like to make lots of money in venture capital, so they produce really long agreements. Well, guess what? We're in 99% of these agreements you don't need to read and probably shouldn't read, and they're probably not really, no one should read and probably shouldn't even be there, to be honest. But there's a few things you need to know about, and we're going to show you what they are, how to find them, and whether it's material to you or not. And then we'll cover that in the program as well. So let me just walk through the program itself. There are two parts in the first, because it's 2 months, 8 weeks. In the first part, it's orientation. We're going to go over venture capital. We'll go over scouting firms, and we'll give you a highlight on venture diligence. And you'll really start meeting with VC firms in the first month. In the second month, or the second 4 weeks of the 8 weeks, we'll give you some tools to use to evaluate the managers. We'll help you pick managers that you want to do a deeper dive on. We'll help you go through the legal process with those managers, and eventually we'll cover how to invest in the managers. And we're seeing like great results here. Pretty much everybody in the program finds managers that they connect with and end up making investments. So and we're concluding our third cohort right now, and the numbers are impressive. I don't want to put the cart before the horse, but as I mentioned, all the managers have found investments. The investment amounts are significant. People are happy. It's overall a great experience for everyone. The general partners love it. The limited partners love it. It's been great. There's a few perks with the program as well. As I mentioned, you're going to be introduced to the top emerging managers. They are probably the top decile. And actually, I would say they are the top decile, and they are even possibly the top ventile. So top 10%, possibly the top 5% of emerging managers worldwide. So you're really getting some of the best. And we even have opportunities to invest in some of these funds at lower minimums. So if you're getting your feet wet and you want to maybe invest in a few more funds, but put a little less money to work per fund, we have packages that will allow that. And not all managers do it, but we kind of encourage managers to do it. So some of the, I would say, we'll feature a set number of managers for you to look at, not like an infinite number, because it's the top ventile, top decile, right? So it couldn't be an infinite number even if we wanted. And I would say about half of them have special packages with lower minimums to allow people to do a little more diversification. You have opportunities to co-invest with our fund of funds. So we are, as I mentioned, invested in many of these firms, these venture capital firms and general partners that we feature. And you can co-invest with us as we go through the program. We make new investments. We'll let you know. And if you want to co-invest, you can, of course, co-invest. And we give you hands-on guidance to complete a fund investment. So we'll be doing one-on-one office hours with me. We actually have one of the most prolific emerging manager investors ever on our team, a gentleman named Mark O'Hara. He's done 300 emerging manager investments in his career. And he'll be there to meet with you, to talk with you, and give you guidance as well. So you're going to be in good hands. And this program, it works well with angel investors looking to up level into doing some venture investing, high net worth individuals, family offices, and institutional investors. We've had like the Sovereign Wealth Fund of Malaysia down to angel investors coming in. And what we do is we break up the program into working groups of like-minded investors. So, and we usually do that by the amount of money that you're committing. So it's not like there'll be a person investing $10 million in a group with a person investing $100,000, you'll have groups of investors in the program that are investing similar amounts in social groups, sharing their experiences so that, uh, again, because a $10 million investor is going to have a very different experience than a $100,000 investor. And so we make sure to group them together accordingly. Um, the dates. So the final date. Oh, I pulled the wrong one up, guys. So I have two presentations. So this was for the last one. Sorry about that. So it's going to be starting in I think, well, let me see. No, these are the right dates. Okay, so the final deadline is March 17th. I just had a brain spasm there, if you will, because I remember updating these dates for this presentation and then I looked at them, they didn't seem right, but that is correct. So the final deadline to apply is March 17th. It will start on March 26th, and we should have the program finished by June 19th or possibly a little sooner. So that's the rough schedule. Again, in the program, you're going to meet amazing peers. You're going to learn the basics of investing, and you're going to make some great returns. It has an 83 NPS score, which is the latest program is a bit higher, so I think it's 87. This was cohort 2, but we're still collecting the NPS scores right now. And yeah, we mainly do this to help. Most of the people who come in the program are referred, and it's just been a real pleasure and joy to run it. And what I'd like to do now is stop sharing my screen, come back here. Hey, everybody. I see we've got a couple questions in the Q&A. So if you don't mind right now, what tends to happen in these things is I'll go through these questions that are here, and then all of a sudden, with 5 minutes left, a ton of questions come in. So if you do me a favor, if there's anything you have a question about being an LP, the LP Institute program, let's get those questions in now, and then I'll do my best to get them all answered and not have that end of program rush. So there's a question from Brittany. Can a fund of funds investing in GPs who also be raising from LPs apply and participate? Yes. So we have fund of funds come in pretty regularly. In fact, we've had fund of fund partners come in and be like, this is a great program. I should get more of my team to come in. And they'll invite other partners from their team and even some senior team members to come as well. So fund of funds are pretty common participants. And as I've said, we've had them even come through a couple programs where one fund of fund will come and then invite more people in the next program. So fund of funds are definitely welcome. If you haven't done your fund of fund yet and you are raising it, then that's not good. So what we don't want people in the program who are trying to solicit investment from other LPs in the program. This is a capital deployment program, right? So we are working with limited partners to learn how to deploy money into actual general partners. So if you're not going to be deploying, because let's say you're raising, then there's no point in being in the program, because the whole point of the program is to master deploying capital into top deals. Okay, so okay, we got that one. I see we lost a question. It might have been archived. Would you recommend to start with the LP Instant, then do VC Lab, or the other way around? This is from Raza. So generally speak, so let me talk about the programs that we run. And guys, don't be shy. There's this Q&A button on the side. Get your questions in. I can also see if there's stuff coming in the chat, but questions in the Q&A. So let me just outline the 3 programs that we have and, timing, etc. So we have, 3 programs that we have and, timing, etc. So we have, 3 programs that we have and, timing, etc. So we have 3 programs that we have and, timing, etc. So we have 3 programs that we have and, timing, etc. So we have 3 programs that we have and, timing, etc. So we have 3 programs that we have and, timing, etc. So we have 3 programs that we have and, timing, etc. So we have 3 programs that we have and, timing, etc. So we have 3 programs that we have and, timing, etc. So we have 3 programs that we have and, timing, etc. So we have 3 programs that we have and, timing, etc. So we have 3 programs that we have and, timing, etc. So we have 3 programs that we have and, timing, etc. So we have 3 programs that we have and, timing, etc. So we have 3 programs that we have and, timing, etc. So we have 3 programs that we have and, timing, etc. So we have 3 programs that we have and, timing, etc. So we have 3 programs that we have and, timing, etc. So we have 3 programs that we have and, timing, etc. So we have 3 programs that we have and, timing, etc. So we have 3 programs VC Lab, that is it, amazing time. Maybe if you could put the links to all these programs in the chat, Domenica, that would be great. So VC Lab takes someone who has an idea for a venture capital firm or fund, and we get them closed in about an average of 5 months and change. And that is a program where if you want to start a venture capital firm and fund, it's going to get you closed in the shortest possible period of time. And to give you a sense of what 5 months and change, how fast that is, the average venture capitalist takes 18 to 24 months to get to a first close. The average VC lab graduate, I believe, is now around 5.4 months. Okay. So it is more than 3 times faster than average to help a manager get to a close. It's not an educational program, it is a close program. We also run something called the Venture Institute. The Venture Institute is a program where if you want to learn about how venture capital works, because you want maybe a job in venture capital, we'll train you on everything, the ins and outs of how venture capital actually works. And this program is very important because we're creating about half of all new venture capital firms worldwide at Dessel Group and VC Lab. And there's so many firms that we're creating every year. In fact, I'm pretty sure now we're over half of all firms that these firms need employees, and they're not enough people able to work in the firms we're creating, so we have to create the workforce as well. So Venture Institute, you're going to learn everything about how venture capital works. And then last but not least is the LP Institute, which we're talking about today. And the purpose of this program is really to help limited partners master the craft of investing in venture capital, and particularly emerging managers, the top returning portion of the asset class. And you're going to do some learning, some socializing, and a lot of actual investing. So generally speaking, you got to be an LP to be in the LP Institute, and you have to be a GP to be in VC Lab. And so we do see people go through the LP Institute and then go into VC Lab. We see some people go into VC Lab and say, I don't want to be a venture capitalist. It's much harder than I thought. So then they go into the LP Institute, but they're pretty distinct and different programs. And what I would say is that if you're thinking to be a VC, just go into VC Lab. If you're thinking to be an LP, go into the LP Institute, but you really shouldn't even need to do both because they're pretty disparate things in the world. If you're an LP, you're a capital allocator into venture capital, you're probably doing something else, running a family office, running the sovereign wealth, whatever. Um, and, but if you want to be a GP, that's a different game. Go into VC Lab. Okay. Liz is asking for performance staff top decile. How is that determined? What horizon valuation methodology if they're on their first fund still? Yeah, so that's a great question, Liz. In fact, we're going to cover that a ton in the program. So I'm going to break it down into a few different parts, right? Because you asked it's a great question with a couple different components, right? How do we determine if they're good or bad? And then what is the time horizon and valuations, et cetera. So I'll start with the second part first. So generally speaking, venture capital returns start generating. So there's something called the J curve in venture capital, where in the first 3 or so years of a fund, the returns are often negative. Interestingly enough, in many of our firms, they don't have the J curve, but I'll come back to that in a moment. And so the return horizon on venture capital is you tend to be about 8 years. You start seeing some really positive returns, and you tend to see emerging managers generate real DPI, which is cash on cash returns in the sort of 10 to 14 year time horizon. So these tend to be long-term investments. Listen, there are lots of, we get DPI early. Some people make returns in, you know, 3 years, 2 years. But if you want to look at the industry, you might to get 1x cash on cash after like 5 to 7 years, and then you start getting multiples in that in 7 to 10 years, and you might get some really big exit in 10 plus years, and that's just the reality. It's usually measured, the big metrics are like TVPI and MOIC or MOIC. And that's basically says if I put $10 million into a fund and there's like a TVPI of 2, I'm going to get 20 million back. If I put 10 million in a TVPI of 3, I get 30 million back, right? So TVPI is a pretty common metric that you see. They also measure IRR, which is also a very common metric. And as I mentioned, the time horizon is usually years. The metric that matters most to uh, LPs is what's called DPI, or cash on cash returns. So if you have a DPI of 2 and a $10 million investment, that means you've got $20 million back in cash. And so those are kind of the big metrics that everyone looks at. And so how do we know if someone's good or bad, right? And especially if they're on their first fund. So look, at best, it's an inexact science, but we've now launched 600 firms worldwide. Okay. Um, there's I'm not aware of anything even remotely close to that, period. No law firm, no nothing. So we've launched more firms than anything else that I've ever heard of. AngelList has launched some angel funds. They're very small. We're actually launching actual venture capital firms, and for actual venture capital firms. And so just by law of large numbers, you start to see pretty clear patterns of what separates a um, higher performing GP from a lower performing GP. And it's imperfect, but we'll share a lot of that with you. And I'll give you some examples right now. So for example, the speed at which a GP is able to attract commitments from limited partners is often a tell that they're going to be successful, right? So the faster they're able to fundraise, the more likely they're going to be successful. It's kind of why that is, I'm not exactly sure, but that correlation is something that we see pretty commonly. Another area is that the speed that they're able to get markups. So we have a fund of fund. Our fund of fund does not have a J curve. And so the only way we can't have a J curve is because the funds we invest in don't have a J curve. And the reason the funds that we invest in don't have a J curve is they made some really good investments that got marked up very quickly. Now, early returns do not mean that the fund will get great returns in the end, but it's a tell that these managers are kind of breaking away from the pack early, right? And getting some very early wins. And so that is another area that we look for, who's able to get some very early wins that show their portfolios really breaking out. And so that's another example of things that we're able to look at, measure, et cetera. And so we have a variety of those different observations and correlations that we've discovered by launching over half of all new and emerging firms over the last few years. And as a result, we're able to sort of identify firms that we believe are on track to be that top decile. And the data is showing, at least for now, that they're likely also to be the top decile, because now some of them are 3 years old, and their performance are in the and 3+X TVPI unrealized, and that's exceptional even for a much older firm, right? So hopefully I answered your question, and happy to go into more detail if you want. Okay. Michael's asking, you mentioned that there are lower level commitments possible. Are you able to share about that? Yeah, we have something called the supporter package, where you can make a commitment as low as $50,000. And there's a capital call structure. So if you make a $50,000 commitment, and there's a 20% capital call, which is not uncommon when you make the first commitment, you might only need to put $10,000 to work to get into a fund. Now, as I mentioned, about half of our funds will support the supporter packages. And so not every fund will have that low of a level. Many of funds will maintain a minimum of 100,000. Some funds will be 250, and some will be even higher, maybe 500,000. But I would say we do about half the funds will have supporter packages that allow commitments for 50,000, which means a $10,000 initial check to enter the investment. Faisal is asking if someone's interested to learn for now, but make investments later down the road, would this be acceptable? I would say just wait until you're ready. You're going to be going through making an investment. So you got to learn by doing. And by the way, if anyone else has questions on anything, it could be the market, it could be general LP situations, GP situations, please pop them in the Q&A, and we'll do our best to answer them. Or I'll do my best to answer them, but I have the help of Domenica here. Thank you, Domenica. So the program is going to take you through the process of making an investment. And so if you're not really ready to make an investment, then you're essentially kind of doing things under false pretenses, and that's not what we want, right? Because there's no way to learn how, like, I could write a book on how to do a venture capital investment as an LP, and you could read that book and be like, wow, this is great, right? The problem is it's very different to go through and then do it. And tons of things are going to come up that you're going to have questions about, that no matter how comprehensive the book is, that you'll need to want to dive deeper on. And the reality is that you're going to want to have someone there to ask. You want to have peers there to compare notes with. And so that's what the program does. It takes you through the process. So it gives you all the stuff you need to know. You can read, etc. And it takes you through the process of making that investment, or in some cases, multiple investments. I was looking the other day, and I saw that one of our LPs actually made, I think, 5 or 6 investments. I think that was the most. I think the average is like 3. And I think one person made 5 or 6 in a single cohort. But a lot of people make obviously more than one investment in the cohort. So they're going through this process, and they're finding funds they really like, managers they really like. They're getting assisted with materials, mentorship, office hours, peer support, and they make the investment. So if you're not ready to make the investment, then going through that process is kind of it's not very genuine for the GPs who, and so we want to make sure that everyone is serious about doing it. Faisal. Okay. Anyone else have a question quickly? Because I have some closing thoughts I want to leave people with. But if you have a question, you can pop it in the chat. So I'll start with my closing thoughts. We live in an interesting times right now. We have a lot of problems in the world today, and we have a lot of entrepreneurs working on solutions, and we just need to start fixing the problems of the world. And I believe, from my experience, that there is no better way today than to take capital, give it to ethical practitioners, ethical investors, and deploy it into companies that are fixing the problems of the world. This is our best shot at making the world a better place. We owe it to our children, we owe it to future generations to leave this world in a better place than where we found it. And I'm 52 years old, and I feel that right now the world is in a worse place than when I came into it. And so we really have a monumental challenge before us. And governments haven't really been doing the job. Large companies haven't been doing the job. Non-governmental organizations, nonprofits, foundations, and the like haven't really been doing the job. We're just in a spot right now where something's got to start fixing these problems. And I believe that it's entrepreneurs backed by visionary managers who are backed by capital that cares is the solution. Because there's every single problem humanity's facing, there's an entrepreneur that has a solution. Right now, there aren't enough investors to get capital in the hands to those entrepreneurs. They might be in a market that doesn't have any venture capital, or they might be an industry that doesn't have venture capital. And you say, well, let's look at the United States. There's lots of venture capital in the United States. Kinda. There's not a lot of venture capital in Cincinnati, right? I don't think there's much venture capital, if any venture capital in a place like Kentucky, right? There's no venture capital that I'm aware of in Detroit, right? So yes, there is venture capital in Silicon Valley and New York and Boston, Los Angeles, a little bit in Chicago, but outside of the major markets in the United States, there isn't venture capital. But there are entrepreneurs working on solutions to big problems that can make the world a better place. And so we got to start bringing capital to these entrepreneurs. Okay, like I expected, there's a bunch of questions that came in, so let me just give a couple answers here. Okay, so Sheng Yang is asking, I have trouble accessing the application form of the LP Institute. Could you put if you just email, I guess the email right now, I think it's just send@vclab.team.com. So could you put the email in the chat, Domenica, for Shen Yang? And the other thing is, if you have so we run our application process for these programs on the Founder Institute. So it's possible you have a Founder Institute profile. And so when you go to the Founder Institute site, it logs you in with your profile and you can't see the application. So what you need to do if that happens is log out of the Founder Institute site and then click the application link. And if you could put the link on the Go VC Lab site to the LP Institute page as well, Domenica. So make sure you're logged out of the Founder Institute site. and then follow the link on the Go VC Lab page and we'll take you to the proper application form. And my apologies if you're having a problem. We'll also do everything we can to support you through email as well. The program's doing pretty well, everybody. We've got about half the program. Actually, if everyone accepted enrolls, we'll be at about 2/3 of the program. But right this minute, we have about half of the program accepted and enrolled. And we just finished the early deadline on Monday. That's why we're having this Q&A today. So we've got about 25 spots and a little less if everyone accepted enrolls. So if you are accepted, do enroll. And if you haven't applied, please do apply. Garrett's like said that I answered his question, but I'll read it anyway. I am an LP. The majority of my investments in the equity market, given the inherent uncertainty in VC, why should I continue investing in venture capital instead of investing in strategies used to generate return in equities? So I talked about why venture is important, but I didn't talk about it like necessarily as compared to other asset classes. Look, and guys, I have lots of money. I have money in crypto. Personally, I've got money in stocks, obviously, and which are kind of like they've done well, but it's kind of crazy these days. Uh, and obviously, I have a decent amount of money in venture capital. Actually, right now, my portfolio is weighted more to venture capital because I like to do what I say and say what I do, if you will. So I actually believe that about 20% of GDP should go to venture capital in order to innovate out of the problems that we're facing in the world today. But there's another reason, right? It gets great returns, right? So if you emerging managers, like a 2x is like, that's okay. A 3x is kind of expected. In emerging managers, established managers, a different game. And emerging managers, smaller funds, these I'm talking about right now, emerging manager, smaller funds. If you go emerging manager, larger funds, the numbers are a little different. Emerging manager, smaller funds, 2x is ho-hum, 3x is sort of average, and then you can go up from there and up quite a bit. Our fund of funds, okay, is over a 2x. Okay, so that means we're investing in funds. So we're kind of, and fund of funds are generally the most, they have the least volatility, most stable because you're investing in funds. So you normalize on the averages. Our fund of funds is at a 2 something X, okay? And it's like a year and something old, and a year and a half old to be exact. Yeah, so it's just, you can get really fantastic returns, and you don't have to be that great of an expert. You just need a little bit of guidance on how to do it, and you should get, fantastic returns. Like, you can definitely get great returns with equities. You can definitely get great returns with crypto. I've gotten some great returns with crypto, and you can also get some great returns with venture. The difference between all of these things is that with venture capital, you can actually invest in things that you care about and that can make the world a better place in the ways that you want. So if you care about healthcare, you can get great returns and invest in really cool healthcare things. If you care about climate, you can get great returns and invest in climate, right? So that's why I think venture's interesting. Like in the public markets, you can do it a little bit, but you just don't get the great returns because there aren't the huge um, X's like 5x, 8x, 10x. It happens, but it's just less likely. The 5x, 10x, et cetera, tends to happen in the private markets, and that's why venture capital's there. Okay, one last question from Neil, and of course, we have 3 minutes. So, our investment in startup accelerators like Y Combinator also considered venture capital? So Y Combinator, so why you can invest in Y Combinator. Y Combinator has some funds, but those are pretty much closed. So they have set investors. This is what happens when, and this is why investing in emerging managers is very important. Y Combinator's funds, they're impossible to get into because Y Combinator can only deploy so much money every year, right? Because of how much they invest, et cetera. So they have a fixed limit to how much they can invest. And everybody wants to get in. And so they just can't take more money. And so it's very hard to get in as a result. So if you're in a Y Combinator fund, you'll get invited to the next Y Combinator fund and you take that position because it's very coveted. And the second someone leaves, there's a long list to get in. So the idea of investing in emerging managers is not only do they get the best returns, but some of them will become like the great institutions, like the next Sequoia or the next Andreessen Horowitz. And if you're in on the ground level, every time they do a new fund, you will get an allocation. And that's a fantastic position to be in, especially if it's one of these seminal firms that become the future. So, back to the question. So you can't really invest in Y Combinator. Now, with that said, for example, we have two or three firms that specialize in investing in Y Combinator companies. So if you're kind of don't want to go to the demo day and try and figure out between 100 companies that they present, which is good and which is bad, you can invest in one of these funds, and oftentimes the funds are somewhat specialized. So they'll say, hey, we're doing B2B YC companies, we're doing X type of YC companies. So you would be a limited partner if you invested in one of those firms and funds. All right, everyone, this was fantastic. We ended perfectly on time. Great questions. Thank you so much. I hope that we can help you in your limited partner career. Have a lovely day, and I hope to see you in the program starting in a few weeks. Thanks, everyone.